All right, everyone. Well, welcome to another session here for Pepperstone. Today, we're talking about two pretty important topics. The one is rate of change, and obviously the other one is the anchored VWAP. We've seen some pretty strong market movements over the last couple of weeks post-election. Obviously, continuous trend, a little bit of pullbacks, and some of them could have been picked up using a couple of techniques that we'll talk about in today's session. As always, we'll be going through the live markets as well, and we do encourage you to ask questions throughout the session, which we will be monitoring. So I'm excited to get started today because it's one of my favorite topics, anchored VWAP, and rate of change is something that I guess few people don't use, but it can be very nice to figure out exhausted runs. My name's Thomas Atkinson. As always, I'm joined by Ty Annabella. How are you going, Ty? I think he's sorting out something at the moment. So anyway, let's jump in and start talking about the anchored VWAP straight up. So basically the market at the moment is very bullish. We all know this. And if you look at the US 500, it's been rallying and rallying and rallying. Small drop there over the last couple of weeks, and then we've rallied back up. But one of the things that I noticed when I was looking at this was that we found the daily 20 moving average, which is our red line, and we also found an anchored VWAP off the lowest low. Now, these types of anchored VWAPs can be very, very handy to put through. So if you haven't been using the anchored VWAP tool, if you're using Pepperstone attached to, obviously, the TradingView platform, then it can be very, very good to do this. You grab your anchored VWAP, you can put it on the last lowest low. And I usually like to put it on the big candle over here, which is right there. And what that does is you can see it simulates based on volume weighted average that we're ending up at the same level. And whenever you're doing trading and investing, guys, it's always about confluence. So we want to build the storyline as best we can to grab confluence of different indicators. So in this case, we're using a 20 moving average. We're using an anchored VWAP. And of course, we also have, as you can see here, resistance becoming support, which is what we call role reversal. That's three different separated reasons to potentially want to be in the trade here on the US 500 at around that 5,800 position. Now, from a higher time frame, what we can do is we can actually break it down. But let's actually bring up the rate of change for a second, which is a standard indicator. And I'm assuming a few of you are familiar with rate of change. It doesn't look like it's loading there. Let's just go over to another chart where I've got it up. And what we'll do is we'll move over to the US 500. And you can see here we've got the rate of change. And what the rate of change does is it basically tells you, based on a certain amount of periods, whether the markets are higher over that period of change. So in this case, of course, we have the standard read, which is generally considered 14. And what I find rate of change is really good at is it's great at finding the beginning of strong trends, and it's also really good at finding exhaustion points. So whenever we hit into an exhaustion point, you want to be paying attention to it. And what you'll notice here is I've got this kind of oscillator down the bottom. And if we scroll through a normalized market such as the US 500, and we go back through history, you'll notice it's pretty rare for the rate of change to ever get above kind of that 10 level, around that 10 zone. And why that's important is because if we ever do see, very strong rate of change movements, we have to ask, where is it? Is it at the beginning of a new rally showing us extreme strength? Because whenever you get these huge V-shaped style, very strong moves, they can lead on to further strength, as we've seen here. Or is it at the beginning or the end of a run, such as over here and over here? And what I always like to do is think about it in context. If we have a very strong rate of change, the market's been going up at an extreme level and it hits over a certain amount, it could be telling us that, hey, we need to basically maybe take profit, and we also need to consider whether we want to get out of the position. So for an example, I left here a 14 rate of change. So I'll show you guys the settings. Here it is. The ROC input is 14. And what I've done is I've highlighted here all of the points where we've got a very strong asset, such as Bitcoin here, and it's hit it's hit around that 20 level to 25 level for the first time. And what you'll notice is whenever we've hit this level for the first time, it's coincided with usually around a temporary top. So it's a great early warning sign in markets that maybe you want to say, well, put the brakes on, and we have to expect some consolidation or maybe even a pullback. If you haven't been using rate of change, I'd highly suggest it, especially on very strong momentum style moves, such as currencies and such as things like cryptos. It won't work as well on with a 14 read on something like the stock market because it tends to be a little bit slower. but it's very, very good for these types of reads. So you can see here that recently Bitcoin went over 25 on the rate of change. When we got that read, it just so happened to be kind of when we saw the news, that is, most people were starting to talk about Bitcoin. And from that point, we've actually seen a rotation that started to occur into some other pairs. So Bitcoin's kind of slowed down over the last maybe 2 weeks, and then we've seen a pickup in things like Ethereum, things like Solana, things like XRP, which a lot of you be familiar with, or Tron, all these other cryptos. And that's very interesting because what it was telling you is it's exhausted, it's had that initial big move, and then it's ready for some consolidation. Have we got you now, Ty? Can you hear me loud and clear?
Yep. Yeah, and I think it's consolidating quite well too. It's probably doing exactly what you would like to do, really. If you were a long-term holder of Bitcoin, I think you'd be pretty happy with what's happening right now, wouldn't you?
Yeah, well, so we're just talking about the rate of change being a little bit extended. So obviously it's fine in terms of the way it looks for a further rally in the future, but this rate of change has shown us that we have a very, very strong aggressive move. It's moved to where usually that means there's too much FOMO, as we like to put. So this is a great FOMO indicator for both oversells, where people have maximum fear, and for both overbuys. If you're not using rate of change, I'd highly suggest you should put it on some of your favorite instruments and potentially start playing around with it. Particularly cryptos tends to work very well in these overly aggressive markets. So let's dial that in a little bit here with the anchored VWAP for a second. So we'll get rid of this vertical line. And you can see that we've got a couple of anchored VWAPs I've drawn on the screen here for Bitcoin. And what we'll do is we'll go down and we'll grab some more anchored VWAPs and we'll put them off the last lows. And the reason I like to do this is because I'm very interested to see whether the market has generally respected these levels. So you'll notice over here that we put one underneath either this here or here. Probably want to dial it in a little bit. So go to the 2 hour and have a look. Okay. We want to make sure we're dialing it in with the lows. So let's dial it in there. There we go. That's probably a pretty good one. And what we'll find is that as the market's making new higher highs, it's finding a decent amount of respect around this level. Now, as we always say on this channel, and when we're talking about this stuff, guys, it's patience, react, don't predict. Just because you found where the anchored VWAP might be coming down to find pressure or buying pressure doesn't mean it's going to. So what you're looking for is you're looking for reactions off this point. Here we see a low, a high, a lower low, and a higher high. Well, that's kind of signaling that the market has said, you know what, I respect that zone. Maybe we're moving to the next level. Here we see a low, a high, a lower low that goes underneath that anchored VWAP, but still holds around that level, then makes a higher high. And that's telling us that maybe, again, the market has respected this level and there's a decent chance it goes up. If we can bring that together with things such as the daily 20 moving average, bring that together with such as RSI or rate of change being super negative or something like that, it can help us build a confluent story of oversold and overbought with the market actually reacting to those areas. So, Ty, do you like the idea that, of course, whenever you get hits on an area of confluence, that you must see a reaction from that zone?
Yes, no, most definitely. And I think it's it's at the right place now to basically take off again if it wants to. I think it's consolidating well. I think I welcome consolidation. What we probably didn't want to see, Tom, and I mean, well, maybe people who are long wanted to see it, was it smash through 100 and go to 110 and just keep extending on, because that's an unrealistic market. And if you think the rate of change was big at 100, imagine what it would be at that extreme level. And what that really does is it makes it almost untradeable, doesn't it? Like, if you're trying to predict what's going to happen next, you're leaving yourself really open wide. So I think the fact that it's actually found its spot, consolidating here, now I think we can prepare for the next big move. And I think that's probably the important part. It may not be long, and I think people have to prepare themselves for that too. Like, it may not be a long move, but it's going to be a move where we can actually help, I guess, identify it early if we keep an eye on what's happening in price. And obviously it needs to break an important level now, but I do welcome this consolidation.
So we saw rate of change kind of show us that overbought action on Bitcoin. Now let's have a look at a couple of other pairs. So we'll move from the Bitcoin markets to maybe something like silver. And the reason I want to bring up silver is what you'll notice on rate of change is it's kind of been sold down to these lows in recent times, around the 15th of November, with pretty decent aggression. In fact, the rate of change was so strong in that sell that it likely was hitting a very, very important level. So if we put like a kind of horizontal line through this, we can actually go back through history and have a look at whether these levels tended to be oversells. And you'll kind of see the power of the rate of change indicator when you start to bring these over the top. You can see here, big heavy oversell needs to go back to mean reversion. Big heavy oversell needs to go back to mean reversion. It tends to be a very much an extreme indicator. So it's kind of like RSI from that case. Do I like it more than RSI? Depends. I don't mind rate of change, but it's very, very good to put in the tools or the arsenal and obviously say use it on the daily and the weekly like we like to bring across with some of the other reasons you may look for. So here we have a massive sell in silver. We have a demand level or a support level. We have a trend line coming off the lows. We have, of course, a reaction off this level with these wicks. So that kind of bodes well that the market was at least going to go back up to the daily 20. And of course, it did so. And now it's finding a lot of buying pressure off this level. And that makes sense because this was a huge overall read here where we looked at a very oversold market and we got a very nice level. And we started to see a reaction off that. And that's what you're really doing here as momentum-based traders. So if we are somebody that's looking at silver right now and we scroll down to the smaller timeframes, it's starting to do the right type of thing. You can see here, for many people, this would be a left shoulder, head, right shoulder style, inverse head and shoulders for pattern traders. Some other people would just say, look, it's starting to turn around to the upside and it's finding wick pressure. This is all kind of boding better for silver. It's not done enough yet to go with a swing trade through 3150, which would put in a double bottom style pattern as well on the bigger timeframes. But it certainly is a point where you would usually be interested just based on the based on the rate of change itself.
Yeah, I like the double bottom on the daily. I think it's there's a lot going for it. I mean, we've reeled off about 3 different reasons already why it could go along. Look, 20 moving average is pulling it up, there's no question, but it's also a resistance zone as well, around that sort of 31 to 31.20-ish. But I tell you what, I like it if it breaks through. I think if it gets just a little bit more momentum and just push it up a little bit higher, I think it could fulfill its prophecy of the double bottom pattern and get to 31.50 in a relative hurry if we can get past this 20 moving average. The problem with it was, I think I talked about it in my stream earlier this week, that unfortunately for it, the neckline is also of this pattern is also got moving averages right there as well. So it kind of creates a barrier that would be preferably not there, I suppose you could say. But yeah, there's a lot of ideas, even on the 2 hour, like you pointed out, potential inverse head and shoulders there that could help push it up. And I do love, as do you, different timeframes that are kind of mimicking the same thing, that a potential breakout to the upside, could be happening here. So I like silver.
Yeah. So some other ways to play this using things such as the anchored VWAP would be that we would traditionally kind of pull and use anchored VWAP off certain lows. So we could be going, okay, well, what about an anchored VWAP off this low down here? And then we can draw that out and highlight it. And then basically we would see where that's been touched a few times. Now, it's doesn't look like it's going to load up over here, but generally speaking, it's not. I don't think it's going to be there off this low. I think it's going to hit this one and then probably hit this one over here on the left-hand side. Just give me 1 sec. I'm just going to have to. Ty, do you want to give the people a few helpful tips while we just wait here? I have to fix this up.
Yeah, sure. I mean, just on silver, probably the thing that I would look out for the most is that there's a couple of resistance levels that we need to keep an eye on. I mean, 3150 is obviously the target. So if you're looking at silver from a potential trade perspective, 3150 would be the initial target if we get through these moving averages. But there is a bigger target at around, it's probably 3220. I know we haven't got a chart on the screen at the moment, but when we do see it, or if you're seeing it on your own charts, there is a lot of resistance at 3220 that is basically from probably the last 4 months, which I think has to be respected. So I would look at it as two separate trades. So I think you're going to have problems getting past that 3150. So it wouldn't be a bad take profit area to begin with. But then look at a secondary trade, probably or basically continuation if you want to take some profit off it at 3150 up to the 3220, because I think that's where the next real resistance is. And probably from a chart standpoint, that 3250 is 3220, is probably an even harder area to get through. So I think that would probably be the aim for it. But again, like we always say with silver, you've got to be careful with the contract sizes, right? So it's one of those ones where it can be a little bit tricky. It's not as easy to trade if you're a new silver trader. So definitely try it out in a demo account if you haven't actually tried it before, to make sure that you got your lot sizing and your position sizing and risk management right, because you might get quite the shock if you enter a full contract or something like that. It can move very, very heavily against you from a dollar value and not look like it's done anything on a chart, Tom. We've seen that plenty of times, haven't we?
Yes, indeed we have.
Yeah. So, and going on from that, I mean, I think the fact that we'll touch on gold in a second. I think the fact that gold is basically flatlining, and it has been for a week now. We will look at gold straight once we get our chart back. But you'll notice, though, that both the moving averages that we talk about all the time, the 20 and the 50 moving averages, are effectively running parallel. Now, that tells us two things. Obviously, the market has come to a complete stop, and basically we're going in a straight line sideways. But also, there is a level of consolidation there that we talk about quite a bit. And realistically, you can see it here. The chart's up now on the daily. You can see that we've had effectively 2 weeks of trading where we've seen some wick action early, but it's really, really flat at the moment. And when you see two moving averages move completely side by side, you've got to be very, very careful on that to make sure that you understand that it is consolidating and not to get in too early, because I can really make a case for, look, I could probably give you 5 reasons why gold would sell off and 5 reasons why gold could actually increase from here. I've got a very unbiased view on what it can do short term, actually, before Christmas on gold, and I'm probably happy to trade both directions with equal conviction. So knowing that, I certainly wouldn't be jumping in early thinking it's going to go long or thinking it's going to go short. I think this is where our saying, patience, react, don't predict, really comes to the fore, where you want to be basically letting the market actually move prior to actually you getting in. Let the minions get in there and move the direction first, and then hop in and take advantage of the momentum once it kicks in. Because I can really make a case for both sides in the next 3 weeks for gold.
Yeah, so with gold, it's got a couple of on the screen, but basically gold is quite consolidated. You can see I put an anchored VWAP down the low. You can see how it's been finding buy pressure off that. So it really does show you again on the daily why you would want anchored VWAP. In terms of the rate of change, we have some significant levels going on there from the perspective of not necessarily too many reads right now, but we did see an oversell, and that oversell when it came back down to one of the over the kind of buy areas, which got here second bull zone, we found the reaction of it. So again, the oversell was picked up by the rate of change just with the standard settings. So in the 14 is what most people use. You might ask, why do we use 14? Generally, that's kind of like RSI. RSI is standard as well. So usually the default is one of the better ones to look for when you're checking out these reads. Got a question coming in from Travis Ty about RSI actually, which is, do you ever look at a 2-period RSI for greater than 9, 5, less than 5?
Yeah. Look, Travis, I would probably take that question. Tom and I have learned very, very many valuable lessons over the years. And I think early on in our trading career, which is pushing 20 years now, we did experiment with a lot of adjustment of these indicators, trying to find different periods, different settings for them. And look, we created artificial robots that actually did that for us and tested every setting under the sun. But what we always came to the conclusion of was that the standard seems to be the one that works. And there's a couple of reasons for that. I mean, it's a standard for a reason, because the majority of the world, on every platform that you see, the default setting often is the one that's viewed the most. So don't forget, any indicator is a perception of what's actually happening. So traders have to actually look at it and say, the rate of change is actually king. You're going to have thousands of traders around the world trading rate of change. But if you're the only one looking at a rate of change with different settings to the norm, then you're not really probably getting the benefit of the power of the indicator. And I think, and they're default for a reason, because I think they've been tried and tested over those levels. That's why we don't really deviate from the standard settings. Look, feel free to have a play with it and see what you think. But from our experience, and it's quite extensive because we've done a lot of extensive testing, we've found that generally the default of the majority of the major indicators that are available on all platforms are generally the best, purely because they've got the most viewing from traders from around the world.
So here's an example of oil, Ty, and I want to bring this up because I wouldn't really be using too much anchored VWAP on this. I've scrolled back to a weekly, and the reason I do that is because we are whenever you're consolidated like this, things that are momentum-based indicators such as rate of change or obviously the anchored VWAP as well, using that as kind of like a pullback tool, they're not going to work as well. It's like a ribbon. So if you're not going to really want to use moving averages as much when you're in a range-bound market, as you mentioned before on gold. So it's the same thing with oil. You've got to treat it more as it's found a level of support or demand. It's fine buyers down here and sellers obviously more up at the 71, 72 level. So that's the kind of way I would treat oil in this case. Let's jump on over to one that is trending a little bit better. And of course, it's a big thing here in terms of currencies because it's the US dollar. And we'll load that up. And the US dollar has been incredibly strong. I'm sure all currency traders here would be pretty happy if you were long dollar and short everything else against it. But it has come to a point of resistance. And what you'll notice with the rate of change is it's also hit this large 5 level down here. And this is one of the main reasons I want to do rate of change today, was just to show you that it's kind of come to a point which traditionally has been a point of exhaustion. So we are at a level where it has moved so quickly, so aggressively, that you need to be paying attention to maybe a little bit of a pullback around this area. To give you some symptoms, over here, we get kind of reads that are similar. We get a little bit of a pullback. Over here, we get a similar read. In the range, we obviously get a significant pullback at that point. And over here, we get a little bit of a hit, and then we get a little bit of a pullback. Now, this is not to say that the dollar is going to weaken and crash or anything like that, but it's an early warning sign that when you start to see this consolidation up here, if it does break to the downside, considering the overbought nature of the rate of change, it can strengthen that short and say, well, wait a second, that means that there probably is a decent mean reversion. And traditionally, you're usually going for the weekly 20. Now, over here, it didn't hit it. I understand that, but the other ones usually do. And if you go back through and back test it, you'll find that it often does go back to mean reversion. The rate of change is a very good tool to be able to see an overbought or oversold market and then to look for that mean reversion, which traditionally is back to the 20 moving average and often can be back to the anchored VWAP. As you can see, I've taken an anchored VWAP down here, and they're actually overlapping with each other. That's a good confluence level, and you'll notice I've marked that out because if the dollar does weaken, I don't expect it to find any buyers realistically till down here. And what that can then help us to do as traders and investors is to then go into the smaller timeframes and say, well, if we take a new low, it's likely we're going to move here. So I can therefore potentially scalp on the smaller 15-minute, 5-minute, 1-minute timeframes towards that direction. And it's what we call moving from an equilibrium level to a new equilibrium level. And I'll give you an example of that using Ethereum for a moment here. And basically, once we moved from this level here, distance break, it's incredibly likely that we will move up to this area up here, which of course we did, 3,480. Once we move from this level up here, which we're putting pressure on today, it's incredibly likely that we will move to the previous high over here. And as long as the rate of change is not absolutely ballistic. So at this point, that's the type of thing you want to be thinking about as a trader and investor. You want to think, is this level really significant? When it breaks, will it move to the next level? And of course, if there's nothing on the left-hand side stopping you, it's highly likely it's going to move to those areas. Okay, so we've kind of looked. I'll just quickly stay here on Ethereum for a moment. Rate of change is high, but nowhere near as high as it has been in the past. So it's got room to give in terms of that indicator itself. If you put anchored VWAP, of course, we're not pulling back down to those levels. But notice here that we've got this trend line going down. And this is one of my favorite charts at the moment to be talking about because this is a significant log charted trend line that we've had on Ethereum for a little while now. And a lot of people are looking at this for a breakout. I think if we do get through 3,850, then it could really start to power on to around 4,600, and that will get everyone excited about what we call the beginning of alt season in the cryptoverse. So in this case, Ethereum is obviously powering at the moment. It's doing better than Bitcoin, which we suspected it may have. I think we covered that a little bit last week. But in this case, the rate of change is not quite up at the tippity top that we've seen in the past. And that's just something, I guess, can be very helpful for you to look at this on things like the weekly and the daily and then say, well, over here, we saw this extreme rate of change. We saw a pullback. It reset those. So far, are we at a higher high or a new high like this? No. So that means that there could be further movement left in this momentum play based on just the rate of change indicator. Your thoughts?
Yeah, I like it a lot. And I agree with everything that you've said there, because I think that these are the little, this is the way to use the indicator to try and identify, do some cross pollination of sectors, if you like. I mean, it's kind of nearly a sector if you really want to compare cryptos, and look for the one that offers the most amount of value or bang for buck, if you like. I think is probably the best way to talk about it, because that's the one you want to be trading, right? Like, you don't want to be trading the newest and the shiniest. You want to trade the one that's going to give you the best bang for buck if you get the direction right. And I think that's probably key, no matter what you're doing, whether you're trading indices. I mean, as an example, if you're looking at the three indices, the three major indices in the US, you got the Russell, you got the NAS, and you got the S&P. You don't have to go for the sexiest one. You've got to go for the one that's going to give you the most amount of movement if the direction of all three move. And I think this is probably the case of what we're talking about here, in terms of the ability for it to go longer for longer. I suppose if you want to put it that way. It happened in the NAS, Tom, actually, even. I mean, just as an example, I think we were talking about it last week, where the NASDAQ was lacking a little bit of movement compared to the Russell and the S&P. And then when they did move, the NAS outpowered them. And it can happen very quickly. Like, it's the one, previous, you can see there, like it's broken and smashed to a new high. But if you compare them, if you overlaid them from last week, it was a little bit lackluster. And this is exactly what we're talking about, trying to identify the one that's going to give you the better bang for buck if you get the directional bias right.
It's all about relative gains as well. So you want to say, okay, well, Bitcoin might go up 1%, but what if Ethereum went up 3%? So same thing here with NASDAQ. I'll give an example here of something that a lot of people have been kind of a bit upset with recently, which has been the semiconductor market. And the semiconductor market pretty much has been the most popular stock trade, you'd have to say, for the last 2.5 years. And recently, since probably around March year, you might think, wow, there's been a lot of gains in the semiconductor market. Well, actually, there really hasn't been. In fact, if you looked at it just last week, you would have found that if you bought the tippity top in March, you've had 0% gain over that period, which is not very good considering it's supposedly the best sector in the market. But this trend line has been hit again, and you'll notice here that the rate of change obviously is starting to dip from the low to the higher point. I'll put this on the weekly to really show the overall movement here. And you'll kind of see when you load this up that we haven't got any momentum through this yet. The rate of change is basically flatlining, which makes sense because the price action is flatlining. Tyrone mentioned before that when a coil is occurring, that we want to be paying attention to the way that the market's moving. You'll notice here that we've got this big, strong hammer candle on the weekly coming back off. So it's suggesting to me that there is a little bit of life here in the semiconductors over the last couple of sessions, Ty. Rate of change is starting to move up a little bit. Of course, there's no breakout yet. But if it breaks out, of course, will it go on a fairly epic run? Well, traditionally, when semiconductors have gone on runs, they've at least been able to make it back to this 27, 25 kind of rate of change. So you've got to expect that if we are going on an epic run, rate of change could be part of the arsenal when you're looking for where the targets may be in the future. So it's another cool little way of looking. But this is all about relative returns, and certainly the best sector hasn't been the best for 6 months. All right, we'll move over to a couple of other favorites. We'll just have a look here at Tesla, because that's been one that's moved a lot in recent times. I'm sure quite a lot of viewers out there have been trading Tesla and very excited and happy with the movements after the election because it's been quite aggressive. Again, you'll notice this huge breakout in terms of momentum. Rate of change hits into a 50. Now, if we go back through history, 40 tends to be a very good read for Tesla. You can see here 40 getting hit, and what happens, you can see over here 40 getting hit. This one actually goes higher and hence 50. 50 epic read. Usually 50 means consolidation. And if you go through, again, I encourage you, go through your favorite charts, especially if they're very aggressive markets, like a Tesla or an Nvidia or a Bitcoin or a US dollar sometimes, or even another different currency, maybe even gold. And what you'll notice is that when these things crescendo really high, they're kind of rare, but when that happens, you've got to put your spidey sensors on and say, well, pump the brakes a little bit here. Do I really want to be entering into that trend at that stage? And that's where this indicator can save you from getting into the end of an exhausted trend and making mistakes with potentially leverage up at the peaks or the troughs. So I really like this from those reads. And you can see here, again, I would look at high momentum style stocks and currency and metals. But you'll notice here that whenever we hit these kind of peak crescendo moments, look, sometimes we keep going on, but that might be a decision point where you say, well, I'm going to let my runners run, but I'm not going to add any more scalps in there because I'm a little bit concerned about possibly, a massive sell-off occurring. And I think you'll find more times than not, it is actually a much better read than RSI from that point of view. RSI can stay overbought for a long time, can't it, Si?
Absolutely, just like stochastic. And I think that's probably, like you touched on earlier, Tom, understanding your market is very, very important. Which market you're in is really dependent on, the indicators you're using is dependent on which market you're in. So, like Tom said before, moving averages are really, really not useful in a sideways market when they're basically running parallel with price. So, but they're extraordinarily useful when there's a trend. And just like RSI, stochastic, they can stay overbought or even oversold for a very, very long time. And many a good trader that is learning the trade, Tom, has come undone by thinking that it must turn around at some point, right?
Yeah, that's right. So just because you've got a high rate of change doesn't mean it must turn around, because we saw before that Tesla kept going higher and higher and higher. However, it is a warning sign that you might say, well, I'll let that run. I'll be open to the idea that it could turn around, but I'm not going to maybe go and, use leverage or something like that at those highs and feel the FOMO, because I know that most often statistically, and this is what you've got to get into as a trader, you've got to get into this idea of statistics. If you're playing the statistical game, then you need to say, okay, well, I think that most of the time this is not going to lead on to a good trade for me statistically. And then you can just leave it. And remember, if you come from that abundance mindset that I talk about a lot, then that helps you to really say, okay, well, if I miss this one, there is another opportunity. And that goes for anything, whether you think that there's a special that's going to disappear, and if you don't buy it in the next 24 hours, it's highly likely in the consumeristic world that we're in that special will come up again. And the same thing goes with stocks. You might not get the exact same stock at the exact same price, but you may get another quality stock at just as good a price. Or I think when I overcame that idea that there was always another opportunity, it really made it so easy to look at markets, because you were never really chasing. And I think that the problem is, and one of the reasons, again, we want to do this topic today, is I feel like 2025 and the back end here of 2024 has a lot of people chasing runs. And we've seen moves of as big as 70% in the space of 24 hours on some instruments out there in the markets. And that has people thinking, if only me, could be me, why can't I get on? And they buy this 70% movement. Is that really a good idea? It might go up another 30%, but then it probably at some point will come crashing down 30, 40%. And the rule is usually that you're going to be, unfortunately, if you haven't caught it early, sometimes you've got to say, okay, leave that one alone, move on to the next one.
Yeah, most definitely.
All right, let's go through a few other pairs. We'll do a bit of rapid fire discussion here. So we saw before the dollar. I'm just going to go back to that because it's an important one. Anchored VWAP found this level over here at, so I've put it down the low, as you can see here. And this is again the daily, but you can see this 105. We mentioned this last week. We found the price in the end. So you'll notice that we mentioned it on our last video. We end up finding the price. We bounced off it, which is not unexpected. And now we're going potentially back to like the 106. So maybe a little bit of homework after today would be to load an anchored VWAP off the highs and see where they were kind of marking up here. But if we do take below this level, highly likely we go to the other anchored VWAP, which just so happens to find itself at that level we had marked up before. So a really good one there. And of course, you can couple this with the euro, can't you, Ty? Which is that if the euro breaks the daily 20 and this anchored VWAP here and goes above 106, that's probably going to mean the dollar is going to go below. And at the same time, we've got a decent move on our hands momentum-wise, don't we?
Yeah, absolutely. And look, the euro did the job for us last week. It got up to the 106 before it actually, well, it hit the 20 moving average really and started to come down off it. So, and that's why aiming for those, key moving averages are also such a great way to actually aim for a profit target, because you got to remember, there's static support and resistance, and there's dynamic support and resistance, and moving averages definitely fall into the dynamic range because they are really moving and fluent with price. So especially when you're in a downtrend, look, there's no question we're still in a very heavy downtrend on the euro, right? Like nothing has turned around and given us any evidence that this has turned around in any way, shape or form. But I preface that with a double but, because if we did happen to get up above that 20 moving average on the daily and break past that sort of 106 area on the euro, that's a massive inverse head and shoulders. And that's going to basically proof itself all the way to 108, which is the next very serious resistance zone. So are we saying it's an inverse head and shoulders now? No, absolutely not. But is there potential for it? That's where we read that top line, patience, react, don't predict. Are we going to trade it like it's a inverse head and shoulders? No. But look where it proofs to if it does turn out that way. So I think it's really, really important. I think Tom said it many times before, where trading and analyzing the charts is a bit like a chess game where you're really looking for 2 or 3 moves in advance of what's actually happening in the here and the now. So, and I think that also speaks to what you just mentioned, Tom, in terms of there's an abundance of opportunities. Don't be locked into a certain amount. I think that the art of actually doing correct analysis is looking at a really good range of different sectors and trades, highlighting the levels that you're interested in, and picking and trading only the ones that actually work out and make sense for you. Don't just jump in because you think it might work out. Choosing not to trade because it's not a good setup is a trading strategy in itself. And we've said that many, many times before, and that's because it rings very, very true. And I think this is a really good example, again, of what could happen if we get a move up there. And that's a potential. That's why it kind of annoys me a little bit, when the naysayers say that, technical analysis is great after the fact. But, for the last 7 or 8 years, Tom, we've been sitting here predicting patterns and letting them and watching them play out and trading them as they do it. So understanding what may happen is just as important as actually trading it when it does. I think being prepared to actually identify the opportunity when it presents itself is key to being a successful trader. And hopefully you're able to take a bit of that out of what we've talked about tonight.
The easiest counter for that is just to basically always say technical analysis is a visual representation of human psychology. And that's what you're trading in markets, because you're effectively trading people buying and selling the instrument that you're looking at. And in essence, you're looking for the flow of a herd. So if you think about it, would people jump on over each other to go and buy a TV at Black Friday? Well, we know they do. And that's because it saves $50, maybe only $50 off a normal sale, but they'll do anything for that $50 off, and they'll certainly wait in lines for it. In the same case here, once you start a momentum train, it starts to build upon itself. And I always think of trend as a party. If you get in early to the party, then you're looking pretty good. If you get in midway through the party, it's still pretty good fun. But if you get in just before the party's about to get gate crashed, you don't really want to be there. And you certainly don't want to be there once it gets gate crashed, because then you might have to clean it up in the morning. So we've said it many times before that when you hear the sirens, it's time to get the hell out. And and rate of change could be the sirens. So that's a good one from today. Look, that question comes here from Jan, says, which anchored VWAP are you using? I've left it highlighted on the screen. So it's just the one. Most people should have it off this particular section in TradingView, and you'll just use anchored VWAP. And all you do is you take it behind, again, I like to put it behind lows. And usually what I'll do is I'll go through the smaller time frames to kind of get it a little bit more correct. And I will then load it up through these areas. And what you'll notice is that this then becomes quite a highlighted level. We already know that through the 20 moving average. Is a very good moving average. And then we've got the 106 level for the breakout up here. Well, let's keep going here just for a couple more positions. So obviously we've seen the dollar find a little bit of strength. We're looking at this potential inverse head and shoulders, as Ty said. For now, the trend is still down, though. Euro up, still dollar. So don't lose sight of that. You might have a different opinion. Trend is still those directions for now. if we break down the US stock markets and the markets around the world, generally most of them are pretty bullish in terms of their movements. And obviously, we're actually seeing, as we're mentioning this, the Ethereum is looking at making a new high. So Bitcoin's just been doing nothing really, but Ethereum's actually moved up about 0.5%. It does move quickly. We'll see how it goes over the next sessions. And there's some other interesting stuff I just want to mention. So copper actually tried to break a double bottom and did so over the last 24 hours. And I always find that copper and HSI, probably should have clicked on the right one, but anyway, I got this one. They tend to line up very well. Copper's seen as economic health. Often we look at metals and China be kind of linked together in many ways, don't we, Ty? And in this case, the HSI is also trying to break out. You can see I've got some little alerts here. So again, 20 moving average, the anchored VWAPs there. You can see the rate of change indicator being absolutely ballistic a few months ago. Won't find too many reads like that, but when you do, it's a sign to say, well, let's just let it, have a little bit of a cool off period. It cooled off back here in 22, and of course, it cooled off here in 24. Silvio says, sorry guys, but the trend line at the bottom, Tom, is called, and where is it in TradingView? Okay, wait a second. I'll just get this question here, Ty. The trend line at the bottom is called, I'm not sure if that was actually what you wanted to ask here, Ty. Do you know what Silvio means? I'd like to answer his question.
No, but the trend line at the bottom is called, and where is it? Is it
maybe if you ask the question again, Silvio, it might have been.
Just ask it again. Sorry, the blue line. Are you talking about the horizontal line at 19,800 there?
Down here, this thing down here, that's rate of change. So that's what we talked about at the start of today. This is rate of change, and it's set to a 14. Okay, read, which is traditionally the most used one because RSI is also 14. So all it's really doing is it's keeping you out of trouble. It's telling you when you're in a bit of a FOMO run, pump the brakes a little bit. And if you go back through, I just like it because I love going back through history charts and then seeing how markets have overbought in the past, found FOMO, obviously sold off those levels, or found oversells and then bought off those levels. And if we can use it in confluence with our other systems, it can help us to define better areas. All right, guys. Well, I guess that brings us probably to the end of the show for this week. If there are some topics that you're interested in covering, put them down in the comments down below. As always, as well, if you're watching this in replay, make sure to click on the description down below, sign up for our weekly events, which we do every week on Wednesday. And I believe they are about 8 p.m. AEST. So you can figure that out around the rest of the world. As always, we love to have your time. Obviously, we appreciate you coming here and looking at some stuff. We did have a couple of tech difficulties today, so I do apologize for that in terms of there's a little bit of a lag delay. It can happen. We do a lot of these sessions. Usually it doesn't happen. But we will see you next week to talk about markets. And for now, a lot of the trends seem intact, don't they, Ty? It's turnarounds a little bit potentially in the metals. Silver in particular is worth interesting looking at. But it's going to come down to, do we see China start to fire up again? And are cryptos about to go to the alts? Find out soon.
Brilliant, team. Thank you very much. And we look forward to seeing you next week at the same time.
Thank you so much, guys. We'll see you next week. Bye for now.